income, and these funds are risky. If you take the risk, it is more risky. Next, we come to the ETF funds, that is exchange traded funds. Exchange traded funds. ETF is a mutual fund scheme which combines the best features of open-end and closed-end structure, and it tracks a market index and it trades like a single stock on the stock exchange. Its pricing is linked to the index, and units can be purchased or sold on the stock exchange. ETF offers investors the benefit of flexibility of holding a single share, as well as the diversification and the cost efficiency of an index.
Is this good? Realme as Redmi.
ఏముంది
మార్చాలి. బాగా
హలో అది పోయింది.
హలో.
Yes, sir.
Can I continue, madam?
Yes, sir. Continue.
Okay. Here there is a fund of funds. Here, this amount, this another type of fund of funds is where your amount is invested in other type of mutual fund schemes. Here, this fund of funds invest in other mutual funds, just as a normal mutual fund invests in a portfolio of securities such as debt or equity, or fund of funds invest in a portfolio of the units of other mutual fund schemes. Here, this availability of a fund of funds to an investor helps him select the right funds from a wide variety of schemes offered by different asset management companies. With this, we are closing this different types. Now, just let me another next slide, please, madam. Yeah. Here, just let me give you a very brief introduction to this mutual fund structure and constituents. Here, if you understand this, you can get a better view of this schemes. Here, this in India, we have a fund sponsor. In a company, like there is a sponsor. Here, for any mutual fund, there is a sponsor. Here, this fund sponsor, we call the sponsor of a fund is the promoter of a company. Here, the sponsor will form a trust and appoint board of trustees. This is called, we call them this fund sponsor is a very important person. Here, as per the SEBI regulations, if a person has to qualify as a sponsor, he must contribute at least 40% of the net worth of the AMC and possess a sound financial track record over a period of 5 years prior to the registration. This is with regard to the fund sponsor. And in India, these mutual funds as trust. Here, a mutual fund in India is constituted in the form of a public trust created under the Indian Trust Act. And this trust what it does. The fund then invites investors to contribute their money in the common pool by subscribing the units, and we call it as unit trust. Here, the trust means this trust will give you faith to the investors by, the board of trustee protects the unit holders. The trustees do not directly manage the portfolio of securities. They manage only this shares. Here, the trust ensure that the fund is managed by the AMC as per the objective and accordance with the trust deed of the SEBI regulations. And the trust is created through a document called trust deed. The trustees being the primary guardians of the unit holders, funds, and assets. A trustee has to be a person of high repute and integrity. Here, the trustee, what he will do, the trustee appoints AMC, the trustee approves the schemes, and they have a right to request and any necessary information from the AMC, and they take different actions. And another, like you say, AMC, asset management company. Here in India, mutual funds are, they appoint an AMC. Here, the role of an AMC is to act as an investment manager of the fund. The AMC fund must have a net worth of at least 10 crores at all times. And what are the obligations of this AMC is investment of funds is in accordance with the SEBI regulations and also trust deed. Here they take the responsibility for the acts of its employees and others whose services it has procured. Here this is with regard to the trustees. Madam, next slide. Next slide, madam. Next slide. Okay. Here, apart from this, we have custodians and depositors. What these custodians will do? I mean, a custodian will do the is appointed by the board of trustees for safekeeping of physical securities or participating in any clearing system through approved depository companies on behalf of the mutual fund in case of dematerialized securities. And also this there are bankers to this mutual fund. The fund's activities involve dealing with money on a continuing basis, primarily with respect to the buying and selling units, paying for the investment made, and receiving the proceeds on sale of investments and discharging its obligations towards only operating expenses. A fund's manager play a very crucial role with respect to its financial dealings. Next, registrars and agents. Who is this registrar? Here, if you want to buy the units of a mutual fund, you have to put an application. Here the application is sent to a company, not directly, through only registrars. Here, most of the mutual fund companies, they appoint registrars. Here, like CAMS, Computer Aided Management Services, is there. CAMS, you can apply through this. Apply to the CAMS, and you can buy this any scheme units, and you can, if you want to even redeem back, you have to make an application to this registrars and you can get back. Here the company, this mutual fund cannot directly interact with you, only through, there is a mediator, that is registrar. And also there are distributors. Here the distributors will distribute. In India, the distributor community includes brokers and also independent individuals who are appointed as agents for the purpose of selling the funds schemes. Okay, this is about a few, the persons who are involved in a mutual fund group. Next slide, please. Next slide. Yeah. Here, this overall, this document is very important. That is offer document. Here, what is an offer document? Here, let me tell you what is an offer document. Here, the prospectus of a closed-end fund is issued only once at the time of issue. Here, the offer document is issued open by by the open-ended schemes. Here, offer document is important means it contains all the information. Here, if you want to invest, you want any information. What is the minimum amount you want to invest, or your amount is invested in which type of schemes, like equity or debt or balanced or whatever it may be. Here it contains each and what is the performance previously done by these mutual funds. Each and every details of the mutual fund is given in an offer document. Here, why it is so much important to the investor? Why? Here, the offer document is one of the most important sources of information from the perspective of the prospective investor. And the investor must understand the fundamental attributes of the scheme. Here, the offer document is the operating document and describes the product. What are the contents of this offer document? Here, the details of the sponsor and the details of the AMC and the description of the scheme, the terms of issue, the historical statistics, investors' rights and services. All these are given in this. Here, a short form of this offer document, it is called Key Information Memorandum. Here, the offer document offered by SBI Mutual Fund Scheme, it may run around 150 pages. Here, one cannot go and understand all these 150 pages. Here, the same information that is contained in the offer document, that is given in a short form, that is KIM, K-I-M, that is Key Information Memorandum. Next slide, please. Next is yes. Here, these are the different contents of a document, that is name of the mutual fund and name of the scheme, the type of scheme, name of the AMC, class of units offered for sale, price of units, name of guarantor in case of assured return scheme, opening, closing, and earliest closing date of the offer. Next. Next. Next slide. Next slide, madam. And also it has the risk factors. What are the standard risk factors? Scheme specific risk factors, financial information, condensed financial information of schemes, constitution of the mutual fund, investment objectives and policies, management of the fund, offer related information. Next. Next slide. Yeah, investment procedure, scheme policy, associated group companies, borrowing policy, NAV and valuation, procedure for a redemption or repurchase, description of accounting policies, tax treatment of investment, investors' rights and services, redressal mechanism for investor grievances, penalties, pending litigation and proceedings. Next slide. Yeah, madam, it is over, madam. Madam, I have completed my explanation. Madam?
Sir, thank you, sir. Thank you, sir.
Madam. Madam, now, madam, 1 second. Hello.
Yes, sir.
Madam,
Yes, please, sir.
Now, miss, anyone having any questions or doubts, then you can ask me now. I am ready to give some more clarification or explanation to any of the terms that are used, or any specific doubts they have out of this lecture with regard to the mutual funds. I can clarify, madam.
Yes, sir. Yes.
Okay.
Ma'am, Nagarani, ma'am.
Anybody want to clear your doubts? Please raise hand. Okay. Pratyusha, audible?
Audible, madam. You carry on,
Okay.
madam. Audible, madam.
Okay, ma'am. So no any doubts. Sir, okay, sir. Respected management members of Srivani institutions, today's speaker, Dr. G. Harnath, Department of Commerce, YVU, Srimati Y. Usharani, Madam, Principal of Srivani Degree and PG College, faculty members, students, and participants, happy afternoon, everyone. It is honor for me to express my gratitude to everyone present here. First of all, thanks to Dr. Harnath sir for accepting our request to attend this webinar. On behalf of students, management team, extend vote of thanks to the speaker of the day for enlightening
Madam, I
us
am in the chat.
his
Madam,
views and opinions.
Madam,
Hello.
Madam.
Sir.
I'm getting some questions in chart to some two questions.
Okay, okay, sir. Okay, sir.
Let me explain. Just a few seconds. Okay.
Sir, okay, okay, sir.
I'm getting here. Which mutual funds are better for investing the money? Here, there is no best mutual fund. Here, according to your, if you are taking more risk, you can invest in equity funds. If you don't want to take risk, you can invest in debt funds or income funds. Here, usually, if you invest in equity diversified funds, that will be better. There are certain schemes like SBI schemes are there offered, or Canara Bank, Canara Robeco schemes are there. You can invest here. You have to see the performance of the particular schemes will be, you have to watch here according to SEBI regulation. The mutual funds, they give you the performance here for the past 1 year, 3 years, 5 years, and accordingly you can select according to your, whether you want to take risk or you don't want to take risk, or based on your what is that return percentage, like that you can try. And if you I'm giving clarification for the another question, that is either short term or long term mutual funds. Here in mutual funds, usually only short term. That means if you are investing in equity schemes, it is long short term. You can buy the units of the scheme in a at any point of time in open-end schemes, and you can sell it in the open-end schemes. And if you want to invest in long term, means like equity linked savings schemes are there. That is also invest in equity diversified schemes. You can get minimum time period is there 3 years, or you can invest in debt securities for a period of 1 year or 2 years or 3 years. It depends on you. Here we have, according to the different types of investors, we have different types of mutual fund schemes. There are more than 2,500 mutual fund schemes are there, and you can take select according to your convenience. Here, how do we know the particular company is good for investing? Here, all these 44 mutual fund companies are good. What I am saying is, here you have to see the fund manager and the past returns. Here, a particular scheme for the past 5 years or 1 year or 3 years, you see the returns, and then you can invest. Here, no, all the 44 mutual fund schemes are good. Here, it is only that you have to look into the particular scheme and you see the return they are offering. Okay, sir, what are the sources of getting the information about different companies' performance? Here, all these 2,500 schemes for 44 mutual funds, the performance is given in AMFI website, AMFI website. Yeah, this Amphi website, you will be getting complete information about the net asset values and their performance. You can, there is one website, definitely you will be getting all the information with regard to the mutual funds. Okay. Yes, sir. Yeah, with this I am closing my discussion. Thank you. Thank you. Madam, you please carry on, madam. Madam? Madam?
Yes, sir. Yes, sir. Wait.
Madam, I have clarified most of the doubts. Still, if
Yes,
they are
sir.
getting,
Thank you.
I can wait, no problem, madam.
Okay, sir. Thanks. Ma'am.
Okay, Pratyusha. Is it audible, Pratyusha?
Yes, madam. Yes.
Okay. Sir, thank you very much for accepting our request to attend this webinar, sir. On behalf of student management team, extend vote of thanks to the speaker of the day for inviting us with his views and opinions. We are grateful to Dr. Harnath, sir, for sharing his views and detailed explanation on the topic of mutual funds. Sir, hearty thanks for excellent presentation and making session very interesting and meaningful. Harnath, sir,
Thank you, madam.
You have explained about the meaning of mutual funds. The term mutual fund is very popular, familiar to the society, but no one knows clearly about its functioning. But today, you have explained the very clearly about the mutual fund. Sir, in your speech, every aspect of content is crystal clear, sir. Thank you. The key points highlighted in this webinar is nothing but funds pooling mechanism, investment mechanism used by the mutual funds, mutual funds, its users, effects to the general public, different kinds of mutual funds and its facilities, means returns, risk associated with each and every type of mutual fund, legal requirements. Some types are having high yielding capacity and high risk. On the other hand, some are having moderate income and minimum risk. Availability of tax shelter for these mutual funds, marketability, liquidability, and how can we convert them into equities, dividend system in mutual funds? What's the position of mutual funds in stock exchanges, terminology used in stock exchange in connection with the mutual fund, portfolio management by mutual fund companies in India, in other countries, parties involved in the mutual fund transactions, documents used and its contents. Very clearly explained. Your explanation is there and also suggested way out. So we understand that it is essential to the students, faculty and participants and all of us who want to know about mutual fund while going to investment in the sector. Thank you very much, sir, for enlightening all of us. Thank you for making this webinar meaningful and interesting. Thank you once again.
Thank you, madam. Thank you, madam.
Finally, I express my gratitude to the management of our college, especially our correspondent, madam, Dr. Narayanamma Garu, for providing encouragement to conduct such event. And I would like to express my gratitude, thanks to Srimati Usharani Madam, Principal of Srivani Degree College. Thank you, Madam, for providing wonderful guidance, cooperation, and support. Thank you, Madam. My sincere thanks to convener of the session, Sudhir Reddy, sir. Thank you for your support. And my deep sense of appreciation to Dr. Pratyusha, Department of Electronics. Thank you, Pratyusha Madam, for your coordination and bearing entire responsibility of this webinar. And special thanks to the members of Department of Commerce, PG section of our college, M. Gurumurthy and Subhashini. Last but least, thank you. Thank you very much, everyone, all the faculty members and participants. This session is not successful without your participation. Thank you very much, one and all.
Thank you, madam. Thank you, sir.
Thank you, madam. Thank you very much for giving me the opportunity.
Thank you. Sir, shall I end the meeting, sir?
Okay, madam. Okay, right, madam.
Thank you, sir.